Eric Muadh with Muadh.com with world market analysis for the weekend of May 14th and May 15th, 2016. Let's take a look at how Asian markets closed on Friday. We can see pretty much, let's call it a down day, as you can see there. If we take a look at how Europe closed on Friday, you can see pretty much a mixed picture, but to the upside on the major averages. Take a look at how the Americas are trading with about 3 hours to go before the close, about 3 to 4 hours. And here we are seeing that Brazil is down about 2%. The Canadian market is up 0.22. And with the US markets here, let's see here, with about half a trading session to go. Let's take a look at how the US markets are trading. Pretty much a mixed picture. Let's call it an unchanged day for the day. We see that crude oil is up about or down about 0.9%. Let's go to the charts. Let's begin by taking a look at Australia, which has had a nice run off the lows of February. Now the question is, what next? And I think it's coming back to test the weekly resistance. If you take a look at the RSI, this is where the RSI broke down off the highs of 2015, and now we are coming back to test this line here. My suspicion here is that more than likely, unless we can move above that area here, this is where one can expect a pullback after a nice run again off the lows of 2016. So here I would expect a pullback based on resistance, given that this is where it stalled off the highs of 2015. If we take a look at Japan, I still hold the view that it has a lot of work to do to repair the damage. And here we've been drawing a simple line connecting RSI highs. So until we clear back above this line, the market should be suspect, if not lower. And again, we are coming back to test the recent breakpoint of the break coming into 2016. So this was the break. If we draw a line from there, we can see that this has been a challenging spot over the last couple of months. So until we can move above these two lines, one has to assume here that the market net is bearish, or at least should be looking to go lower. Until we can move above those two lines of resistance, this is a market that I would be leaning towards the downside. Also on the monthly, let's continue watching this recent monthly closing low for 2016. Should the market move below 16,026.76, which is the current monthly closing low for 2016, that would be a major sell signal, because that would also be pushing the monthly RSI to 3-year lows if it happens, which would be a major sell signal. And the monthly MACDs are already trading at 3-year lows, so the risk here continues to be to the downside if it moves below 16,026.76. If we take a look at the Nifty, we can see that the two lines we've been watching, there's topside resistance that needs to be clear to the upside if the bulls want to take control of the market. So this has been a problem and continues to be resistance. Also, there's a line coming off the break here. It's a simple line that we've been watching that brought the market off the highs here middle 2015, and so we've been drawing a line from there. That has been a problem for the market. So the market does need to move above those two lines as far as the Nifty is concerned if the bulls are to take control of the market. Also, the recent 2016 weekly closing high needs to be broken, or at least the market needs to clear that resistance if the market is to move higher. So these are some of the things we need to watch for. The level to watch there is 7899.30. The market does need to clear that resistance on a weekly closing basis if there's any chance of bulls taking control of the market. And there is one more consideration. It's a simple line connecting the daily or the weekly closing highs here. So all these weekly closing highs do form a straight line right there. So this is a simple line connecting the weekly closing highs going back to 2015. The market needs to move above that line if it is to recover and start trading higher. So we can see that lots of resistance levels here that the market needs to move above. It needs to clear these resistance lines on the weekly. It needs to move above this trend line on the weekly, and it needs to move above this price if the bulls are going to take control of the market. Otherwise, without doing all that, net, we have to assume here that irrespective of what the market is doing day to day, net, we have to assume that the market continues to be at the moment pointing down until it can clear those prescribed resistance level. If we take a look at the South African market, we can see that we still continue trading below this line here, which either has been support or resistance over the last, let's call it 17 years or so. You can see that trading below this blue line corresponds to the periods when the markets were lower. As you can see here, corresponds to the period when the market was lower here. And recently we've been holding below that blue line, which corresponds to period here that the market should be net pointing down. So until we can move above the blue line, the South African market is indicating for now to be expecting lower prices based on this long-term monthly chart. If we take a look at the French market, we can see that it is perhaps one of the major markets that is showing the worst setup, in that it is trading below 2016's previous monthly closing low. Of course, we haven't closed for this month, but as long as the French market is trading below 4353.55, which is the closing low on a monthly basis for February 2016, this is a worsening situation because we see that the RSI is trading to fresh 3-year lows. So that's a major sell signal. We see that the MACDs are also trading at fresh 3-year lows, which is another confirmation that the potential for lower prices is elevated as far as the French market is concerned. So with the MACDs and the RSI on the monthly charts all moving to fresh 3-year lows, the risk here is that this market could see a substantial drop. If we take a look at the DAX, the German market, we can see that this pullback over the last couple of weeks was consistent with our previous analysis, that it had come back to test the break line on the weekly RSI. So it had come back to test this line, and of course we knew that if it hit that line and showed resistance, we were going to get a pullback, which is exactly what we got. On the monthly, we continue watching the recent monthly closing low, because any break of the recent monthly closing low here would actually suggest that this market could actually see much lower prices. The level to watch there is any movement below 9495.40. So a break of that recent monthly closing low for 2016 would be bearish, because that would also suggest that the monthly RSI will be dropping to fresh 3-year lows, and the MACDs already are bearish in that the MACDs are trading at 3-year lows. So the risk here is if and when the monthly chart breaks to fresh lows. We haven't seen that breaks so far, so that's okay, but let's just watch that price range, because below that 4995 level, that is a trigger point that the markets here could actually be moving and worsening. So right now it's holding above that. Also, if you take a look at the daily, this is where it needs to make a stand, because on the daily, if you go back to this entry here, which began, so this entry here, which is where the RSI had moved out of a range, corresponds with a nice entry here in price. We haven't been back to that level ever since then. If we draw a line from the RSI moving higher, so I'll draw it here with a blue line, so that line has been support. We held support here for the lows there, we held support here with a double bottom support for the lows there, and then we held here about a week ago for these lows. And so coming back and holding on the blue line would be bullish. So the market does need to hold that blue line if there's going to be a bounce. Otherwise, if we break through that line, any break of that blue line would suggest that now there's no support and the market could easily move lower. So we need to watch that if the market is to move higher. Otherwise, a break of this blue line would suggest that now the market could be looking to break the monthly lows for 2016. So right now, the way it closed as of Friday's action looks okay, because it is still holding this line here, which is what the bulls want to see. This would be similar to the FTSE daily. On the FTSE daily, you can see that it is holding this RSI lows line, which is exactly what you want to see if you're a bull. So the market is holding exactly where it needs to, with a nice double bottom on the line we drew last week. That's good. Otherwise, of course, we know that if we don't hold that line, things could suggest a drop. We can also see that we are coming back to test the line that began this move off the lows here. So this RSI movement there corresponds with the lows of February. So we can draw a line from there, and we can see that the market is coming back and showing support based on that line right there. And again, double bottom support, which is very encouraging for bulls, because that double bottom corresponds with the previous double bottom we drew off the blue line. So as long as the daily is holding on those two lines, the market should be okay, unless we come back and break those two lines. If we break those two lines, then that's when we're going to expect a drop. But for now, since we are holding above those two lines, things do look good in terms of the daily chart for the FTSE. If we take a look at the Canadian market, of course, we've been watching the line where it had stalled previously on its weekly RSI, which happens to be this red line here. This red line has been a problem. As you can see, it gave us the highs during this resistance on the red line, gave us short-term highs there, resistance here, we had some short-term highs, resistance on that red line, short-term highs, and again, even recently we hit that line and we pull back there. So clearly what market bulls want to see is two things to happen on this chart. Is number one, we do need to move above the red line. Otherwise, failure to move above the red line could suggest that the next meaningful trade is lower. And also we do need to break out above recent 2016 weekly closing highs. The level to watch here for a breakout is if the market can clear 13,951.45. So market bulls want to see a breakout above that price range. Otherwise, failure to break out either in price and also failure to move above the red line would suggest that net the next swing trade is lower. If we take a look at the long-term monthly chart for the Brazilian market, we see two lines of resistance. The first one being the top side resistance. You can either draw it this way, it connects the tops on the monthly chart going back to 2002, or you can even take this high here. Either way, you can see that those two lines do offer resistance right now, and the market is responding to that resistance line by being negative for the month. And also there's another line coming off the break of the highs. So this break here in 2011, so that break brought the market off the highs there, and we can draw a line from there. You can see that that red line is also right now offering resistance. In fact, the red line has been a problem for this market. As you can see, resistance here on the red line for the highs there, resistance even here, uniform activity resistance for the highs there. We hit that line there for the highs of 2015, and now we are hitting those two lines for the highs right now of 2016. So net the monthly chart here suggests that we should struggle around here based on resistance from the top side, number one, or based on resistance from the break line here. So until we move above those two lines, this market net in my opinion suggests that month to month it should be going lower. If you take a look at the daily chart, and here I'm using the ETF EWZ, we can see that there's a lot of resistance levels here to consider. Number one, we've been making some slight improvement in the highs here in terms of the daily closing highs, but you can see that the RSI has been showing resistance on this line. So until we can move back above this line, this market is suspect in my opinion. So market bulls, as far as the Brazilian market is concerned, need to see the market move above that line. Otherwise, around here it struggles. Otherwise, for now, I think the market here is suspect, maybe for lower prices, but net we can't really be too bearish on a market that is at least holding above its 50-day moving average. So right now it's trading sideways, which is okay. That's constructive. We won't see a major drop until we break this RSI line here. So as long as this line is holding the market together, I think we can give it the benefit of the doubt for sideways action. And also let's keep in mind that the true breakout above the recent, any breakout above the recent weekly closing high here, just under $30, any breakout above that is what the bulls want to see. So if the market is to see higher prices, just like the Canadian market, it needs to break out above 2016's current weekly closing highs. Otherwise, for now, be on the lookout for my part 1 of US market analysis, which should be out around the same time I release this video. So be on the lookout for my part 1 of US market indices. Eric Mwadhi, Mwadhi.com. As always, enjoy your weekend. Good luck, peace, and blessings. E-A-C-S. Woo! Yeah! Woo! Yeah, yeah! Ooh, ooh, ooh! Yeah, yeah! Ooh, yeah! Woo!